Hello, everyone. It's Steve with Aptera Owners Club. Just 2 hours ago, Aptera sent out this email. Many of you guys probably got it, but basically, it's an email talking about how they reopened the investment round. The investment round has been closed for a little while, and last time it was available, it was at $9.80 per share, and now it's $10.50 a share. They've reopened it. This is not the preferred investor round that we talked about a month or so ago. This is for anyone. So you do not have to be an accredited investor to invest here. Anyone can invest. There's just a minimum investment of $1,000. And there is some information here. In the last 3 months, we've been hard at work on our Gamma vehicle, the third stage of our four-stage development roadmap. Now that we've moved into our final assembly location in Carlsbad, the next 6 months will be focused on supply chain and manufacturing build-out with the goal of ramping to full-scale production in 2023. I To me, this sounds like a little bit of pulling back on their um, predictions. So they're saying over the next 6 months, they're going to get their supply chain and their manufacturing plan built out. That means March, kind of towards March is when the manufacturing thing is going to get built out. March of 2023. That's their current projection. And of course, projections are always a little bit optimistic. So I think if they do deliver a vehicle this year, it is for sure not going to be a vehicle that comes off the assembly line. It will be a one-off vehicle that's handmade. And again, I think it would be pretty significant achievement if they were able to deliver even a single vehicle this year. But their current projection is 6 months to get their supply chain lined up and their manufacturing built out. We're looking at March 2023. And most projections don't stay on schedule, so maybe a little later than that. So I think a lot of you guys that we made some predictions in a video a few videos back about when we think the production timeline will actually be, and this seems more in line with that. As of today, they received over 30,000 reservations, representing over $1 billion in pre-order value. Now, one of the things that I hear from people's comments is like, why don't they get all the people that have reservations to put in like $1,000? The reason is that deposit money for these orders are held in an escrow account and they're not touchable for operations. They cannot use them to buy equipment, pay rent, build out stuff, or pay suppliers because that is in an escrow account that they can't touch and is refundable. So if they can't deliver a car, if they fold, deposit money gets refunded to the customers. That's the difference between being a customer and an investor. If you're a customer, there's essentially no risk to you. You put down your $70 to pre-order a vehicle, that $70 is coming back to you. Once they turn it into a non-refundable, and that's what Elio did, that's really sketchy because that means that people may not get any vehicle whatsoever and they're allowed to use their money. And Aptera is not doing that, which is good. So you can't ask your customers to to give you non-refundable deposits that you use. That's just weird. You can ask your customer to become investors, and if you're an investor, if you believe in them, that's what you should do. Is you should become an investor. An investor has risk because you could lose all your money as an investor. Okay, anyway, strategic achievements with Red Viking, Alafe, and Yazaki are a few of the supply side agreements we've cemented. We also know they have an agreement with Eve Battery and a couple others. We couldn't be more excited. Follow this link. So if you follow that link, you end up here. And then you can also get to this thing by going to Aptera's regular page and clicking on this invest link here. But it'll lead you to this portal, and you can click on this sign up to invest. At that point, it leads you to either put in your password if you already invested with them, or to create an account, and then you can decide how much you want to invest. And so each share price is $10.50. Minimum investment is 96 shares or $1,008. So that is the minimum investment. Now, the question is should you invest? Now, before we go forward, I am not an investment professional. I am not a financial professional. This is not investment advice. You do what you want. This is just for information purposes. This is, again, not investment advice, and I am not a financial professional. All right. If you want to look at this view offering circular, it leads you to this, which basically is the SEC filing that we went over like a week ago in the video I made about the SEC filing. I will link it right here. So it's essentially the same thing. I went into a deep dive in that video. So if you want to know more about what's in this SEC filing, you can click on that link. But some highlights of this thing is if you look at this, it tells you how many outstanding shares they will have after this offering. It's about 67 million. So 67 million at $10.50 a share is looking at about $700 million market cap. Okay, so they are valuing the company at around $700 million. And you have to decide yourself, is this company worth $700 million now? And do you expect it to be worth more than that in the future? Because you're going to want it to be worth more than that, because otherwise your investment, if it's worth less than that, your investment's going to lose money. If it's worth more, you're going to gain money. So currently they're saying it's worth around $700 million. And then there was, okay, so then this is a lot of like legal talk, talking about all the possible bad things that can go wrong. And we talk about that in that other video. We'll go into more detail. This, I just wanted to get to this one part in here. We'll get to it. Hold on. Okay, here we go. Liquidity and capital resources. In that SEC filing video, I said that Aptera has stated they need $50 million to make it to production. And people thought I was just pulling that out of the air or something. No, it's like it's written right here. Right here. We anticipate that we will need at least 50 million in addition to the amounts previously raised to reach the vehicle production stage. So this is an official statement in a filing to the SEC that Aptera is making themselves. Okay, so this is as official as it gets. This is not speculation. They are saying they need at least $50 million in addition to the amounts previously raised to reach the vehicle production stage. Now, we know that California gave them a grant for 22 million. So that is a big chunk of this 50 million. They need like 27 million more left. And they're hoping to raise that in part through this offering. We had another video where we talked about their options. Their options are this through non-accredited investors, or to get accredited investors, or to get someone who's very wealthy to donate a lot of money. Now, I think that, or they can get an ATVM loan. That's another option. So there's kind of like 4 options for them to reach that amount of money. The reason they need this money is because they have a lot of staff. They're burning cash because they have a lot of engineers, marketing people, finance people, and logistics people working for them. You got to pay their salaries. They have large buildings that they have to pay rent for, and rent for these buildings are probably in excess of $1 million a year just in rent. Then they have to, pay for their suppliers. Like their suppliers aren't going to supply them parts for free. So they have a lot of expenses. They have no revenue, so they're going to burn cash. So they need money. But the fact that they got that California competitive grant is a very good sign, and it signals to possible investors that California, when they were competitively evaluating these things, gave Aptera a very high score, which means that they believe that Aptera is going to succeed, and they've given them $22 million to help them on their way. So I think they're a lot more attractive to investors now than before they got that grant. So I think that's good. When you look at the valuation of this thing, you have to kind of look at the valuation of some other companies and see where they're in line. So I looked at a couple other companies that are sort of like startup EV companies. And so here's Canoe. Canoe is current market cap of 850 million, so a little bit more than Aptera is valuing themselves. Canoe also has not delivered a single car. They're kind of in a kind of a messy situation right now because they did get a little bit of a bailout. They were about to go under by losing money. They were burning through so much money, but Walmart kind of sent them a lifeline. But according to this article from Forbes, they're burning cash like crazy. and their financial situation is still not good, even though Walmart has signed on to buy a lot of their vehicles. And then it says Canoo has just recently signed an agreement with the hedge fund Yorkville Advisors to sell up to $250 million worth of its shares at a discount to their already depressed market price. So what they're saying is they're selling to a hedge fund below $3.10 a share. If you were a pre-IPO investor in Canoo, you bought it at probably, I mean, at least towards the end, you bought it at $10 a share. Then it rode up and it was at $20 a share, so you doubled your money, and now you're at $3. And $3 is you lost 70% of your money basically if you invested in Canoo at the time of IPO. Um, Now, some people who got in really early in Canoo, they're still doing fine because they probably still made money. But people that got in towards near the IPO, they're not doing well because it's lost money, and they're now selling shares to a hedge fund for even less than $3 a share. So that's something that they have to do. Sometimes they have to sell below their last offering in order to attract big investors. So this hedge fund is a big investor. They're giving them $250 million, but they're saying if you want us to invest that kind of money into you guys, you're gonna have to give us a discount, and they are doing that. Um, then another company is like Fisker. Fisker is worth almost $3 billion in market cap, which is really interesting to me because Fisker also has not made a car, and Fisker has a very interesting model where they're not actually building their cars. They are in a contract with Magna International, which is an Austrian company that just does contract manufacturing to manufacture their Fisker Ocean. And they have tons of money. If you look at their financial statement, this is Fisker's financial statement. They have almost $1 billion in cash right now. They have $851 million in cash. And they are burning cash. They're burning cash too, but they have a lot of cash. They have almost $1 billion. And the way they got their $1 billion is they went IPO at the right time and raised about, I think, about a little over $2 billion. So they've burned through $1 billion already, I think. Um, but Fisker is, I'm surprised that they have this kind of valuation actually. Um, but so obviously some people think that they're worth that. But they have two cars, the Fisker Ocean, which is a small SUV, and a Fisker Pear. The Ocean is going to be made by Magna International, and the Pear is going to be made by Foxconn at the Lordstown factory that they just bought out from Lordstown Motors. So Foxconn bought out the factory from Lordstown Motors, and that's how Lordstown Motors got some cash to keep going because Lordstown is a little bit on life support as well. Um, but we'll have to see. Fisker has actually done pretty well. So maybe their model is good, is not doing their own manufacturing and just being a designer of cars, because that's essentially what they are. If you look at Sono Group, which is the other that the Sono Scion, which is the other solar electric car. There's three solar electric cars we've been following: the Lightyear, the Aptera, and the Sono Scion. The Sono Scion, it IPO'd at 25 and now it's down at 3, so people didn't do real well on that IPO. I think that their SPAC price was $10. So when they first went IPO, they went up 250%, but then dropped fairly rapidly, and they've lost about 90% of their market cap valuation. So they're supposedly worth 340 million at this point. And again, Aptera is saying they're worth 700 million. So you have to decide, is Aptera that much better than Sono? I personally believe so, but others may differ on that. Then if you look at the other more successful groups like Lucid is worth 25 billion. So if Aptera got to Lucid valuation, obviously that you would be making, almost 3,000 times your investment, which is 3,000% gains, which would obviously be really good. Rivian, 29 billion, so similar. And then of course, if you get to Tesla, like almost $1 trillion valuation, if somehow Aptera becomes the next Tesla, obviously the investors at this point, we're all going to be super duper doing well. But even highly like relatively successful EV companies like Lucid are needing to raise more money because they're running out of money too. And so here, this is a just from today. Luxury EV startup Lucid looking to raise $8 billion. So they're filed a registration with the SEC to offer even more shares and dilute their shares to raise about $8 billion. So that's the kind of money that you need to become a car manufacturer, is in the billions. So Lucid wants, they have a lot of money already, but they're needing to raise $8 billion. If they had money coming in through um, revenue of actually selling cars, they would not need to do this. But they are actually still losing money. And Tesla lost money for I think the first 5 to 10 years of their company. They were losing money. And it's only in the last couple of years, last several years, that they've actually become a profitable company. So being an EV manufacturing is a very hard job. Now, knowing that, do you want to invest in Aptera? Again, the way it works is currently it's a pre-IPO kind of private equity kind of round. So that means any shares you buy in Aptera right now are not worth anything. Like you can't sell it. Like if you invest in them now, you can't sell it to someone else. There's no secondary market for it. Like if you buy SEV stock or Canoe stock, you can just sell it the next day on the market. It's available on the market. Aptera stock is just a piece of paper and worth nothing until they undergo what's called a liquidity event. And a liquidity event is either they go IPO, so they're on the market, they're on a exchange, and then you can sell it, or they get bought out by a bigger company, and then that's a liquidity event, and you get paid out on that. So until one of those two things happen, you're not going to get any money. Your investment is worth nothing. So just understand that and EV startups are very risky. And so the chance of it becoming worth nothing is not insignificant. But you may want to invest in them because you just believe in the company. You want to help them produce the car. And that's mainly why I invested in them personally, is that I don't have a serious expectation of making any serious money off of this investment. If I do, I'll be very happy about it. But even if I were to lose my investment, I'm not terribly upset about that because I really appreciate the idea of the car and what the company is trying to do, and I want to support it. So if you think of it that way, I think that's kind of the best way to look at it. There is a high upside. If it reaches Lucid or Rivian levels of valuation, you're going to do very well in the investment that you make right now at $10.50. The previous rounds were 980 or 920, and then before that it was 880, and then before that it was 380, and then I think in the WeFunder round it was worth less than $1. So people who got in at less than $1, you theoretically have made 10 times your money already, which is pretty good. But that's all theoretical because if there's no liquidity event, your shares are also worth nothing. The WeFunder round people. And the people who got in at 380, your shares are also worth nothing until there's a liquidity event. But let's say that you buy at 10.50 dollars, it IPOs at like $15. That means, you've made, the people that get in now have made 50%. The people that got in at under $1 are doing, they've made 1,000%, and the people that got in at like 380 have made 400%. So that's kind of, you get in early when it's more risky, and it was riskier earlier. Now they're farther along, they have supply chain agreements, they have a manufacturing location, so they're much farther along, and because of that, the value is going to be a little bit higher. So if you wanted to get in, if you got into Aptera 2 years ago, it was much riskier, but that's why it was cheaper. Now it's a little bit more expensive. All right. So bottom line, if anything you invest in Aptera is not worth any money until they undergo a liquidity event, which is either going IPO or getting bought out by a bigger company. Number two, startup EV companies are very risky. There's a decent chance you lose all your money. Number three, if they do well and they do succeed, there is a chance that you make a lot of money in the thousands of percents. That could theoretically happen. And lastly, I think the major reason a lot of us invest is because we just believe in the car and the idea and what the company is doing, and we want to help support them. And without support, they're not going to make it to production without money. That's just the case for all startups. They need money to make it to production. All these startups are desperate for money. Canoe is desperate for money. Fisker actually is doing okay somehow. Sono Scion is desperate for money. Rivian actually has a lot of cash, but they need money too. Lucid has lots of money, but they're trying to raise $8 more billion. So all of these companies are always needing money, and Aptera is no different. They need money to make it to production. And if you believe in the company and you want to support them, then investing is the way to do it. Just understand that it is risky and you may lose all your money. And that's just the way it works. It's a high risk, high reward type of uh, investment. So you shouldn't invest money that you can't afford to lose. And me personally, I kind of I put in an amount that I'm comfortable losing. I'll be very happy if I make money off of it, but if I don't, it's not going to be the end of the world. Okay, so any questions, comments below, guys? Thank you very much for watching. Thanks as always to our supporting members. You guys are investing in this channel. Thank you for that, and have a great day, everyone.